As businesses both in Ireland and globally continue to adapt to changing work practices and assess the impact of the coronavirus pandemic, we hosted a virtual roundtable with Aidan Donnelly, Head of Equities at Davy Private Clients, Vincent Wall, Business Editor at Newstalk, and Jenny Melia, Divisional Manager of High Potential Startups at Enterprise Ireland, to hear their expert views.
Hello, I'm Vincent Wall and I'm joined this afternoon by Aidan Donnelly, Head of Equities with Davy Private Clients, and Jenny Melia, Divisional Manager, High Potential Startups with Enterprise Ireland. You're both very welcome.
Good afternoon.
Afternoon, Jenny.
Hi, Vincent. How are you?
Good form, thanks. Now, we're going to discuss what's actually happened to business over the last 3 unprecedented months, and we all know the challenges out there, and we're going to discuss what's happened to them, where a lot of businesses are now, and what the challenges and opportunities for them are as we slowly open up both domestically here in Ireland and internationally. And we are going to look at the international dimension and publicly quoted companies as well as private sector companies, small and large, here in Ireland. That's the plan over the next half hour. And we start with you, Aidan. Obviously, what happened in early March was unprecedented in that it was a forced lockdown, not just in one country, not just in one region, but almost globally. In terms of publicly quoted companies, the larger ones, how did they deal with that immediately?
Well, what was interesting is when we talk about this, an awful lot of people focus on the idea that, demand for their products massively dropped, or they had to close down operations or things like that. And that was one aspect to it, and how certain companies obviously had to deal with that. But on the other side, there was a lot of companies, who had a supply shock rather than a demand shock. And obviously, it was a very, very different set of circumstances that they had to deal with. And if you look at on the demand side, you would have had a lot of companies where we're operating very well, everything was great, and suddenly, as you said, this lockdown comes, your demand for your product completely dries up, be it an airline or even actually manufacturing products suddenly no longer required or difficulty. And in that case, what you typically saw was a lot of companies going in, cutting costs, reducing salaries for office staff and all, head office staff and all of that, furloughing workers where they could, get rid of travel and expenditure, and basically just try to right-size the business for the new demand outlook that was out there for their product. On the supply side, though, it was very, very different, because what happened was, in a lot of cases, there were companies out there who either the demand for their product stayed flat, or in some cases the demand for their product actually increased, and they had a whole different set of circumstances to deal with. If you were, and it really broke down whether you were a manufacturing company or a service company. Like if you were a manufacturing company, you probably went to your workers and said, listen, good news is you're all still going to have your jobs. And for the most part, workers were delighted to be that. And then about a week or two later, they suddenly go, well, hang on a second. Am I safe going into the production? I don't feel too comfortable. The relief of having a job suddenly goes to, I'm not so sure about this. So it's about managing that. And then, so that's the labour side of it. But more importantly, then you had the supply side of it, or the supply chain side of it. And in some cases, their suppliers had been closed down, because although they're deemed to be essential, maybe their suppliers aren't. Or, you had this mad situation where I've been talking to some of the big global companies where in one country, or even in the States, in one state, they were deemed to be essential, and in another country, they were not essential. So they had different kind of workloads to operate in and try to basically keep the lights on, keep production going when so many of these obstacles were being thrown at them.
And given the fact that, the publicly quoted companies are across so many sectors, and as you say, some of them where actually demand increased because of what they were in terms of pharma or whatever, some of them deemed essential, obviously across different jurisdictions. There are large bureaucracies in public companies. Did it take some of them a while to kind of, one, realise what was happening, and secondly, get their gears in action to deal with the situation?
It's funny. If you look at the very big global ones, like we all kind of think that this started in March, middle of March for us, right? But if you look at a lot of the global companies, they probably had operations in China. They had operations in Central Europe, right? So if you, particularly the ones with China, had seen this coming through, had a lockdown in China, knew exactly what to do, and basically took the playbook from China, put it into Central Europe and Italy in particular, if they had operations there first off, then into Western Europe, then into the US, and they've used basically the same playbook. So from that side of it, once they were able to kind of use their Chinese operations, if you will, as the incubator, they basically just rolled it straight out across the whole lot.
Jenny, you and your colleagues in Enterprise Ireland have a very good view of what's happening in SMEs, middling-sized companies in Ireland across all different sectors. You have a particular focus on high-potential startups, but what actually happened in early March here must have been just a real traumatic shock to privately owned companies in this country.
Absolutely, Vincent. It was seismic, and it's not your typical crisis in the sense, that it was from a global perspective. So, look, I guess our companies, whether they were SMEs or whether they're high potential startups, in terms of some of the things that Aidan has talked through there, we would have had similarities in terms of, let's say, companies first and foremost, where they had to shut up shop physically, moving their people to working remotely. And it's not even your typical remote working, when people have childcare responsibilities and caring responsibilities and so on. So it was multitasking on speed. I think, one really strong additional piece on the SME and the HPSU side is around cash flow. And around liquidity, because we would have had clients who would have seen a very sudden halt in their sales, depending on the sector that we're in. As you say, we work across all of the sectors. So for some sectors, their pipeline fell away, and for some clients, even for work that they had done, then they were going and trying to chase up those payments. On the other side then, if you were in, for example, parts of the food industry, servicing the retail sector, on the life sciences side, in the pharma and the med tech, where what you're doing, was impacting positively on COVID, you were seeing an acceleration in your business, and you needed to be able to cater, for that sudden call and growth. We also saw, issues on the supply chain side, companies who were sourcing in China at the time, or companies who were sourcing in Italy when the outbreak, was at its height in Italy. And in terms of the problems they had, actually being able to get their hands on materials and so on. And then after all of the focus, over recent years and months on the talent war and how hard it's been to find people, or the companies had worked so hard to put, great teams, great skill sets together. And a really big concern on the high potential startup side was, how do you hold on to these key skills? And, really that's where the employment subsidy scheme from revenue kicking in as early as it did made a huge difference. Just listen to the figures there at lunchtime. I think they mentioned there's almost 60,000 companies using that scheme. And really, the purpose there was to make sure that the companies and the employees were staying close, so that as soon as things started to lift and rise again, that the companies would be well placed to kick off, rather than having to go out and try and put skills and so on in place. And, we're certainly seeing the positive impact that scheme is having with the companies.
Vincent, actually, Jenny mentions an interesting point there about the liquidity, because that was also a massive problem, even for the very big publicly quoted companies. Like we've seen a raft of these big listed companies, in some cases either cutting or suspending their dividends, or in the US, a lot have suspended their buybacks. Others are trying to reduce down the debt. They've realised that actually when the cash flow metrics get tested the way they have, they've suddenly actually got too much debt in place. And, we've even gone to the point where we've seen equity being raised. There's obviously been the high profile ones, the likes of, the airlines and some of the cruise companies, but there have been other companies as well that you would have said to yourself, surely they'd have more than enough wherewithal to withstand something like this. But even those found that their balance sheets were getting stretched and their cash flows were under pressure.
A lot of US companies in particular, publicly quoted ones more particularly I suppose, were able to avail of the enormous monetary support that the US Federal Reserve put in there, and actually they were able to raise significant corporate bonds. including ones in sectors that you would think were almost terminally hit, like Carnival, the cruise operator.
Yeah, and it's very funny. You know, in years, I'm sure, in years in the future, there's going to be plenty of academic papers written about whether the Fed were right to step into, you know, those high yield markets and try to stabilise them, or whether they should have taken the Darwinian approach and let them just die off naturally and do that. And it's a big question about whether you let the credit cycle run its course or not. But I think, you know, in the same way that we've seen the government here step in with the wage subsidies and things like that, it was a moment in time. A decision had to be made, and you know, you're, as the guy Mike Ryan from the WHO always said, you know, it's not about being right all the time. It's just acting. You have to act all the time, and like the Federal Reserve have done that, and they've certainly stabilised it. And you're right, it has brought liquidity back into markets. And I don't think we should underestimate the size of that liquidity injection that has come through. And we look at it in the US, we look at it in Europe. Obviously, the ECB yesterday saying increasing their bond purchasing program, and it's all just part of that. You're trying to put in place. It's hard enough dealing operationally with an issue like this if you're a company without having to worry about the liquidity. So if you can in some way have the liquidity situation sorted out for you, or at least ameliorated, it then allows you focus on actually running the business.
Jenny, one of the issues for Irish companies, particularly SMEs, I suppose, was that after they got over the immediate trauma and took the emergency measures that you outlined there in terms of cash flow, in terms of how their workers were going to be able to work on safely or go into furlough. I presume one of the big problems was, and to some degree we're still there, is nobody knew how long this was going to go, particularly back in March, April, where we didn't know how severe the virus was going to get. So I presume companies, particularly smaller ones, were looking for advice. Did many of them come to you? Did many of them come to the local enterprise offices around the country?
Yeah, so one of the things we did, Vincent, as well as, you know, setting up new financial supports to support the companies through the liquidity crisis, was we basically set up a business response hub internally to bring all of the queries through that hub. And I mean, the latest figures I would have seen as of this week, you know, we've engaged with about 3,500 companies through the hub, and this would be a mix of our Enterprise Ireland clients, Leo clients, clients that are manufacturing and involved in internationally traded services around the country, even where they mightn't be Enterprise Ireland clients. I suppose when we were putting our supports together, you know, we were looking out to the end of 2020 and beyond, and really the way we structured the supports in the first instance for the companies was to first of all help them stabilise and get them through, you know, the next few weeks and months, and give them some time and space and funding to help them, you know, put a fresh plan together to rework their finances. You know, some of them need to go back out and talk to their customers. They need to understand what's happening in their particular sector or their markets, because it is all so varied and so diverse. And then the next piece then is to make sure, you know, that they are fully equipped to grow, you know, when the opportunity comes about. And look, we're already, you know, seeing opportunities. And like Aidan says, we've been seeing opportunities from the get-go with companies coming into us, companies who've been able to turn their hand to doing something else. And, you know, you'd be reading about these in the news, people who weren't involved in healthcare at all, and they have, you know, reconfigured what they're doing to make a contribution to solving the healthcare problem at the moment. We have companies who were, particularly on the startup side, you know, maybe on the digital healthcare piece, involved in some clinical trials and so on, and things were moving along steadily, but moving along slow enough, and now COVID has actually accelerated everything for them and made the whole thing happen an awful lot more quickly. So I think in some cases, you know, where we have companies who have technologies now that are supporting, you know, be it COVID, be it the new way that we're all working, and whatever that's going to look like in the future, and the new way that we'll be living, because we're going to have to live with this virus for the foreseeable future. You know, all of those companies are getting an uplift.
Jenny has kind of moved us nicely and elegantly along there, Aidan, to, I suppose, broadly speaking, where we are now, and in terms of, I suppose, international, large, publicly quoted companies, a lot depends on their sector, a lot depends on what markets they're in, but broadly speaking, where do you think they are now?
Well, it's funny, I've been talking to a lot of CEOs in the last couple of weeks, particularly a lot of the US and some of the big European ones, and it's funny the mindset that they've gotten themselves into, in that, from the very get-go here, they kind of had three distinct phases in their head. That it says there is the fix the immediate problem, then develop a plan to live with the virus for how, it could be the next 6 to 12 months or something like that. And then the future opportunities that come kind of 12 months and to 18 months out from where it started. And very much they're in that kind of 6 to 12 month period in terms of how do they start living, how do they start operating and returning to business. And I think, again, it depends very much on the type of enterprises that they're in. But first and foremost, they have got to, I think about the how their business ran and realise that how it's going to run in the future is not necessarily the same thing. So there might be a situation where, for certain industries there's going to be an extended period of working from home for head office staff and all of that. And can that work? And I think probably a lot of companies now are looking back and saying, oh, there's no way we'd have ever had work from home. And suddenly when it's forced upon them, it's working and everything is fine and everything is great. There are issues that have come up, and it's very interesting when we can talk about those as we would think about the future as well. But, when you get into a production line, the idea of having social distancing means you can't necessarily have 40 people on a production line in the same way that you used to have. So it's things like, or, them all going to lunch at a certain time, or them all having a break at a certain time. So, when you talk to the managers now, it's about just changing work practices. So maybe it is, a staggered starting and ending time, so that you're kind of feeding people through the system. Others,
which has its own costs.
Which it absolutely has its own costs. And there are other companies I've been talking to this week that are involved in contract catering and things like that supply to businesses. And you're kind of saying, well, how are you going to talk to your customers and go in? So look, we are going to have to go in there. We won't be offering the same service that we offered before because of all the constraints, but we have a service offering that we can offer. And in that case, this company in particular is a large uniform manufacturer as well. And they've said, well, actually what we've done is we suddenly realised that we can actually start producing an awful lot of PPE that our own workers are going to need and our customers are going to need. So we now have a business that we never thought we had in the first place. So I think particularly at the large company level, they're open to everything now, that much more than they may have been in the past. And they're kind of genuinely, they had a couple of weeks or a couple of months where they were on the back foot. They're moving very much now from defence to offence. And I think that the final thing really that none of them know is you can open your business tomorrow, you can start manufacturing, you can start your service business or whatever. What you don't know is when are your customers going to return. And I think that is going to be the key for a lot of the very big companies, trying to work out when their customer base comes back, because that has knock-on implications going back to the finance and things like that.
And for Irish companies, Jenny, I mean, you've talked about those that have managed to keep trading, those that have been innovative. But as we know, a huge number of sectors have either had to close themselves or their customers just aren't there for whatever reason. And we know, unfortunately, that some proportion probably won't open again, which is a tough thing. Hopefully the majority will. But where do you think companies are now, principally, say, focusing on the Irish market, but also those with some exports that are starting up again? And what are the particular problems facing companies in your own area, the high potential startups, where they may not have significant revenue streams and they're depending on their investors or their financial supporters to stick with them?
Yeah. So I guess that is one of the things, Vincent, on the startup side of the house, as well as issues in terms of, where revenue stopped and so on. A lot of those companies, they're so dependent still at this stage in terms of bringing external investment in, and we're definitely seeing a softening in the external investor environment. And, most of the Irish startups as well, they would be funded through business angels and through, promoters networks and through, regional networks and so on. So that is definitely an area of concern. And so one of the things we would have done in EI, one of the supports that we introduced was basically emergency equity funding for our startup projects that were progressing well before COVID impacted, so we could go in quickly with an equity injection alongside investors, and that really wouldn't have been something we would have done before. In terms of, I guess, in terms of the opportunity side, like the domestic market, and you can see it every day on the news, it is very challenged, but our overseas offices. So we have, at the start of the year, we'd 40 overseas offices opened, and we have just started in the last few weeks reopening our overseas offices. And so we are gathering, all of the intelligence real time on the ground in terms of what's happening in particular markets, particular sectors. We're sharing that with the clients through a series of webinars, and people will see that up on our website and how to register, and through our regular client newsletters, in terms of people understanding what other companies are doing, and companies who had a foothold in the market, lessons from those companies in terms of how to do business there, and experts on the ground in the markets as well who can bring their intelligence to the clients. We're also running webinars in agile innovation, and we've seen a really big increase in our existing support around innovation and around our programs and offers that help companies to drive efficiencies. And that is one of the things with tough conditions. It does drive this thinking in companies. So like when I would be looking at opportunities, and I know I'd be a glass half full person, I see opportunities for new startups. I mean, you're right. So some companies won't make their way through this, but what we would be looking to do in terms of entrepreneurs who are ready to go again and willing to go again, and maybe have a new opportunity, and maybe even have a better opportunity, to get them in talking to us in Enterprise Ireland. I definitely think, we'll see an opportunity for companies to develop more diverse product and service portfolios. I'd say more diverse revenue streams. We've talked about supply chains already, so there will be a lot of work done by companies to, in as much as they can, create more secure supply chains. And in fairness to our companies, our companies that were going to be, very exposed to Brexit, we've done a lot of work with those companies on strengthening their supply chain. So I think, we'll see that moving across the wider client base, and talent and new skills. So one of the things that we're seeing now over the last few weeks on the startup side of the house is that we have talent now that wasn't available to these companies, and we are supporting some of our companies now to take on senior strategic managers who will be absolutely fundamental to helping those companies accelerate their growth. I'd love to see that we'd have more innovation between companies, that we'd have more of our companies working together on an innovation agenda that actually makes them stronger internationally and gives them a more competitive offer.
Jenny, one thing I suppose that always strikes me when you look at the public versus private markets, when when you look at the big, large public companies, they have a huge amount of infrastructure in terms of different large HR departments, all these other different things. With the onerous requirements on employers now, as businesses start opening up, do you think a lot of them, because they just don't have the infrastructure in place to be able to manage all of the new requirements, that a lot will just say, oh, we'll just continue working from home rather than going back into the business because it's just easier?
I can see a blended approach, Aidan, in terms of companies I've been talking to. So I think it's probably been a revelation for some companies in terms of what they could do remotely, and maybe they hadn't fully realised just how effectively they could work. I think in terms of the smaller companies, what you typically see, across some of the SMEs, we've a lot of family businesses, very tight, lean management teams. They're multitasking at the best of times. And, it's one of the areas in terms of where we would be trying to support companies then to work with third parties. So we can help them beef up their resources, even if those resources aren't internal to the company. So, for example, on the financial planning side, that would be how we've actually structured that support. It allows the companies to bring in, financial experts to work with them. A number of our clients, and I'm thinking myself now in terms of our startup clients, they are working in the HR space. They're working in HR tech, and they're servicing some of these companies, including some of the larger companies. So, again, there's an opportunity for companies to do more there. And I think it's really important, on the SME side, that we keep the companies well networked and that they are talking, to each other, both on a regional level and on a sectoral level. And I don't know if it's something that you guys are seeing in Davy, but certainly in terms of, webinars that we're involved in through EI, and, in terms of working with some of our other partners, we're getting great virtual attendance with people very happy, to participate from home. And even in terms of, if you look at the international, the knowledge and the trade events and so on, a number of those moving virtually. And I don't think anybody, 2 or 3 years ago would have said, look, that was something they were going to see happening.
Yeah,
so,
no, I'd agree with you there, because it's funny. I would never have thought, we've obviously been using webinars and things like that for clients over the last while, and the last 3 days I've just actually been at a conference in New York, a virtual conference in New York with US companies, and it's different, but it's nonetheless very, very productive than being there in person.
New York on your screen, North County Dublin out through the window.
That's something like that. Yeah.
Let's.
Yeah, and that's where it could be really interesting, from a green perspective, because I think there is an opportunity here for us in terms of looking to see, finding opportunities now for companies to be even stronger at the end of this, and how that can be done, and in parallel help us accelerate the transition to low carbon economy. And where people will actually ask the question, do they need to fly to New York, or can this actually be done more effectively? Won't be as much fun though, maybe.
Well, you have to wait for the shops to reopen anyway in Manhattan, Jenny. Let's look out towards the midterm, towards the future, and obviously we're not going to get back to where we were, I think, both in terms of what companies are doing and the psychology of their customers, whether they be corporate customers or individual consumers, until we have either an effective antiviral drug or a vaccine, and that could be 18 months away before people are completely comfortable. But we can't wait for that. I'd say that for those companies that have managed to survive, that are now looking as to how to move forward, in large companies, there is still, in terms of preserving their cash, in terms of keeping their bankers or other funders on side, there must still be a big debate internally as to when do we start into any sort of capital investment again.
Yeah, I think so. What I think is really interesting, what this has thrown up, I think there's going to be a couple of very, very big trends that emerge out of this, and I think when you talk to the large multinational companies, they're seeing this, and in a lot of cases these trends have been in place beforehand and have just been accelerated. So things like, we talk about the digital transformation, like it was very interesting. Microsoft at their last set of results said that they basically have seen 2 years worth of digital transformation happen in 2 months, okay? And people suddenly, that move to the digital transformation, ordering stuff on apps, in mobile, being not having to have physical documents, all of that type of stuff. All of that digital transformation is huge. And I think out of necessity, people have had to use it for the last while, but now they're suddenly going, well, actually, you know what? There's a sense to doing this, and let's reconfigure our businesses. I think the other thing that's going to be very, very important is connectivity, and I think I'm talking there about things like augmented reality, Internet of Things, mobile devices, broadband. Because, when you look particularly at the Internet of Things and augmented reality, going back to that idea of having production lines where you have less people on it. Well, you know what, if you can take your maintenance staff off the production line, if you can replace some of the people on the line with machine vision and all of that type of stuff, there's all of this thing that has been going along, but suddenly if you're forced to reconfigure the way you're looking at your business and the way your business is operating, I think it's going to be a very important one. And I think the final thing too is I think that kind of the working from home is really thrown up, and maybe the digital transformation is the whole area of security, and I think in the last couple of weeks there's probably been a bit of a sticking plaster put on it for right now, and we just get the thing sorted out. But I think companies and certainly talking to CEOs of late, they're kind of thinking, right, well look, if I'm going into a new world where working from home becomes a much bigger part of my thing, or having people remotely, not necessarily on a production line or something like that, I'm going to start needing security. So how do I approach this overall security? And I think we're going to see big changes there too.
That sounds like COVID is going to accelerate a huge structural shift. As you say, trends that were already happening to some degree, including robotics, automation, artificial intelligence. It sounds like a lot of people who, through no fault of their own, have found themselves out of jobs or waiting to see if they get back to the jobs they had, may not do so.
May not get the job that they were in, but I do think when you look at all of this, because all of this large capital expenditure, this is all going to require capital expenditure. And I think the nature of it means that there are going to be other types of jobs. There's going to be lots of, as Jenny said, startups that have suddenly found niches that they didn't think existed, 8 months ago, 10 months ago, 12 months ago, and we're seeing an awful lot of that. And I think that just the nature of it will change. But I think there is definitely a wave. And going back to your original point about how do they balance the cash flow requirements and CapEx, I think the CapEx is going to become essential. So it's a question of when and how are you going to fund it. And it's as simple as that,
Jenny, Irish companies, small and large, I assume in so much as they have time at all other than getting their businesses back or planning to get back, must be thinking about the changes in how they engage with their customers, how they market their products and services, because we've all seen through our daily lives, whether social or professional, how new techniques like Zoom or online, they're going to stick. So whatever time they have, they must be having to plan for a very significant change in how they get out there and make themselves known and engage customers and sell to them.
Yeah, no, you're absolutely right. And, we've seen, a big increase in traffic with our e-marketing division in Enterprise Ireland. So, in terms of companies who maybe, for example, on the consumer retail side, we're considering, putting an online offer together, and it's really, like Aidan said, accelerated that for them. And in fact, for some of our companies now, the online side, it's absolutely after starting to boom in the last couple of weeks. I think on the talent side it could be interesting because like if you go back to the discussion there, around remote working, really now an Irish company, if they find, for example, if they're in terms of being more willing, I guess, and more open to working remotely, what's to stop us having, great, for example, great engineers, based in other parts of the world as well, working with our Irish engineers and working with our Irish scientists, to accelerate the growth of the company. I think in terms of the automation side, and we would have had a specific focus on this now over the years for our manufacturing SMEs. We have a specific fund to help them on the automation side, and as they work through their new plans and resetting the business, they will be coming back in to talk to us, and I mean they'll also be talking to the banks as well, in terms of co-investment. And then on the startup side, we're continuing to work very closely with the angel community and the VCs through our seed funds and so on, to ensure that the funding is available not only for the new companies coming through, but for the companies, that are on a good growth trajectory and who need further investment. So I think it's shaken everything up. I think it's brought us kind of 5 years forward, like Aidan says, in terms of some of the planning that was underway, and some parts of it will definitely stick. So we have companies now making and closing deals, virtually with international customers, whereas before they probably would have jumped on a plane to do it. We have startups pitching for investment virtually. We closed the first round of our competitive start fund now for our new companies in the last couple of weeks, and all of that pitching was done virtually. So some parts of that are going to stick, and it is going to improve efficiencies.
And all the more focus on the need for top quality broadband right around the country.
Oh, absolutely. And I'm speaking now from my concrete bunker in the middle of Kildare, and I have been really surprised, at how well it held up. I probably would have been a bit more critical of it before I started working from home remotely. So really, in terms of what is possible, I think it has opened people's eyes.
Aidan, we might draw this slowly to a close in terms of some of the other major trends that might be accelerated by what we're going through. We've seen, because of trade tensions before the pandemic hit, trade tensions between China and the US in particular, countries more conscious of having strategic supply lines closer to them. And that's obviously become a huge issue in terms of what we've seen with medical supplies and PPE and all of that. That's both a political now and I think a business need. Do you think that's going to change, particularly larger companies where they might?
There's no doubt about it. It's very interesting. I read a survey there last week from basically looking at large CEOs, and what was the number one thing on their agenda now is supply chain reshoring. And it's not about necessarily changing all your supply lines, but actually making sure that if you're manufacturing in a place, your supply chain is actually much closer to you. So if you're in the States, you have a supply chain that's maybe US and Canada. If you're in Europe, it's probably Eastern Europe and things like that. If you have operations in China, you're sourcing it from China. But I think the other thing too is when they look at their supply chains and they look at the inputs that they've got, it's about categorizing stuff that says, look, if it is something that is required just in time, well then we definitely need to move it nearer to where it would be. For stuff that we kind of only order once every 3 months and it's not a problem, we can probably leave that coming out of China if it makes sense. So I think the whole idea, it's not just going to be, we'll move everything closer. I think businesses are looking at it and kind of going, let's look at our inputs. How are we going to change them? What strategically needs to be kept closer? What can be let go a little bit further? And I think the other thing that's very, very important, it kind of ties into something that Jenny was talking about in terms of e-commerce and things like that. It's funny talking to both Visa and MasterCard. Basically, and not surprisingly that they'll say this, but they're very clear on the idea that the age of cash is dead. Mm-hmm. And I think, when you're looking at the idea.
I'm told you haven't opened your wallet for 3 months.
Well, listen, I'm trying not to open my wallet at all. But your tap and go, your amount of people who are doing e-commerce, and it's not just about your Visa and your MasterCard, maybe your Revolut cards and the fintech stuff, PayPal accounts, and there's just all of this extra stuff for electronic payments suddenly becomes much more important. And I think, particularly at a retail side of it, people have gotten used to now hardly ever using cash. And if that was your biggest problem, that, I've always used cash and now you don't use it anymore, and you're used to tapping all the time, you'll just continue tapping, and it's almost as simple as that. So I think definitely supply chain reshoring. I think electronic payment is going to be a much bigger part of all this. And as Jenny said, virtual negotiations is going to be the way forward.
Jenny, obviously there are going to be both challenges and opportunities in terms of that supply chain reshoring, as Aidan puts it, because the multinationals that are based here and grounded here may look to Ireland for more of their supplies, perhaps as they think strategically or continentally rather than globally in some instances. Some interesting opportunities there. Also, the other thing I suppose that if we might finish on this is we've seen €3 billion in savings alone in Irish households gone into their bank accounts in April, perhaps up to €15 billion in additional savings by the end of the year, it's reckoned, because a lot of people are still maintaining their incomes but with nowhere to spend. And whatever Irish companies are doing, particularly if they're focused on the Irish market, they should be thinking about how do they tap into that pent-up consumer demand when it finally is released.
Yeah, and it's a great point, Vincent, because I think, people are just chomping at the bit again, in terms of, seeing all of the restrictions being released over the summer and so on. Look, I think, in terms of Enterprise Ireland and our links into, the various investor networks and people like Davy and so on, we will be working closely with them on the investment side of the house and, trying to encourage as much investment as we can, into our startup companies, because, one of the things we would have seen coming through the last recession, we saw some great companies come through that recession, companies that changed their offer and their business model, on account of what was happening back then, and companies that basically rose from the ashes of other businesses that went under. So, we absolutely expect to see the same thing happening this time round. On the consumer side, it's really about companies being close to the consumer and understanding what the consumer wants, and that's the way it's always been. But I guess our hands now have been forced by this pandemic in terms of, like what Aidan was saying around, dealing with cash. You see people now using their phones to pay who would never have thought about doing that, in a month of Sundays before. So, we are going to have to get used to this new way of working and living. But, the one thing I've seen in more than 20 years of working in Enterprise Ireland is just how agile our SMEs are, how innovative they are. And, even 2 weeks into this crisis, we had companies approaching us where they had spotted a new opportunity and they wanted to come in and discuss it with us and see how they could work it through and so on and put a plan together. So, I've absolutely no doubt that, the Irish SMEs will step up to this. They'll adapt where they need to adapt. They'll move fast, and where they spot something, they'll go for it.
Well, on that relatively optimistic note, we'll leave it there. I've certainly enjoyed the conversation and I hope you find it informative. But Aidan Donnelly, Head of Equities, Davy Private Clients, and Jenny Melia, Divisional Manager, High Potential Startups, Enterprise Ireland, thanks for joining us.
Thanks, Vincent.
Thanks, Emil. Thanks, Vincent. See you now.
Bye.
This discussion was recorded on Friday the 5th of June 2020. J&E Davy, trading as Davy, and Davy Private Clients is regulated by the Central Bank of Ireland. At Davy, it's not just business, it's personal.